Well, Chinese e-commerce giant Alibaba considering a second public listing. According to Bloomberg, the company looking to raise up to $20 billion through another listing in Hong Kong. While the deal is still tentative, those close to the talks say Alibaba plans to file a listing application in the second half of this year. The listing would come as trade tensions between the U.S. and China continue to escalate. Alibaba first went public in 2014 right here on the floor of the New York Stock Exchange, raising a record $25 billion in its public debut. This does not mean that it's no longer going to list on the floor of the stock exchange. This just gives it a new market, a market that is closer to home at a time where we know geopolitical tensions are rising and trade tensions, specifically between the U.S. and China, ramp up.
Yeah, and it's also interesting to note that the stock exchange in Hong Kong has changed its rules around listing with dual class shares. Right, so in the last year, the Hong Kong Stock Exchange relaxed rules there, allowing companies with a dual-class share structure, somewhat still controversial when it comes to corporate governance, and it's very popular with tech companies and with media companies as well, giving certain more voting shares to different shareholders of the company. We've seen it at Google, we've seen it at the New York Times, for example, and at Alibaba, and that's one of the reasons it held off, reportedly, on listing in Hong Kong before and came here to the New York Stock Exchange.
Look, the stock is down 22% in the past year, comes as China's economy is slowing down as this trade war ramps up and concerns that it could be caught in the crosshairs. Again, another reason why this timing is interesting. But look, many of these stocks actually holistically in the tech sector are higher. Perhaps for Alibaba, a new way to get a little boost in the share price.